Welcome everybody to How Would You Build It? Today we're talking about building brands and building teams. I've got my co-host Renier here today again, and our first guest, Carl from Purple Group. So nice to join. Welcome, gentlemen.
Thank you very much. It's great to be here.
Yeah, I'm excited for today's conversation. So we're going to draw on from Carl's experience building up Purple Group, or for some people that might not know Purple Group as much, but Easy Equities. I reached out to Carl when I saw a bit of a Twitter war happening, which was quite an interesting little thing. And then you guys did a space. So Carl, maybe do you want to just set the tone for us, kind of, give us some of your background and then tell us about just sort of the happenings. I think the Twitter war specifically all started with the interim results that you guys released.
Sure. So my day job is as the Chief Marketing Officer at Purple Group, so responsible for all our brand activities, and I also work within the managed product space within Purple Group. But we're a very flat structured company, so everybody sort of does a whole bunch of different things and play across different roles. But that's my day job. My background's financial services, but I studied law and literature, sort of, and by default ended up here. Context for Twitter war? Yeah, I don't know if war is the right term. If you're an a listed entity, a lot of stuff happens in the public space, and sometimes that's good and sometimes that's bad. But luckily, Easy Equities was built on transparency, and it's one of the things that Charles, who started Easy, we were at school together, so I've known him a long time and can criticize him for lots, but he was very clear right up front about transparency, and I value that because we make lots of mistakes. And people who think they don't make mistakes aren't very clever. And so when you make a mistake, I think the important thing is to acknowledge it, to fix it, to learn from it, and to move on. Similarly, if you get unfair, unjust, unwarranted comments, then you also shouldn't necessarily let that slide. And so we also engage heavily with our community. And the person who initiated the Wallaby War, by the way, is part of that community. So why not engage and learn? We're very happy to talk always.
Brilliant. Yeah, well, thank you. Yeah, it was entertaining for everyone, and so just wanted to...
not for me so much, but yes,
I think it was like Hoppers night at night, and you guys were like, I think you even said like, I need to give Charles a break because this is getting a bit long now. It's been a long day, but yeah, those results kind of were in the back of you guys partnering with Gcash from the Philippines, and that seemed to kind of get people's feathers rattled. And Renier, on the show, we generally talk about expanding, so we talk about expanding to Africa. Renier, specifically, what's your thoughts on Easy Equities going into the Philippines?
I think it's interesting, and a lot of people often look at expanding and I go, well, Africa makes sense because we're in Africa, right? But I think we've mentioned before that Africa is such a complex continent. Like, there's almost no two countries that operate in the same way. It's different laws, different things. And if you find a territory where there are other similarities or other gaps or other opportunities, and be it in the Philippines or elsewhere in the world, it makes sense. I think Time Bank did something similar. I mean, they didn't go up in Africa. They also went that side of the world. And that was also interesting for me at the time to go, wow, one would have thought the obvious route to take is Africa, but Philippines is definitely interesting. So, Carl, what was the thinking there in going that side of the world?
So we're big in terms of both extending our product range for our community, and we simply measure that against if we got products that help people either build their wealth, protect their wealth. And similarly, though, because we're in financial services, the world is literally our oyster, because the same problems that the South African investor face is worldwide. Lack of access, people intimidating you, making it more expensive than it needs to be, harder than it should be. So in the Philippines, there's a massive community, first of all. It's a huge population, highly educated population, easy in terms of language, and the particular partnership. So with Gcash, it's a massive app. They've got over 70 million active clients. Gcash is used as a verb within that in that country. Everybody knows about Gcash. And so we're big on partnering, bringing our expertise, but working with an exceptional partner on the ground, and helping them in their mission is something that sort of seemed a really natural fit for us.
So it's a very similar deal to the Capitec deal in South Africa, right?
Yeah, so I mean, on the one hand, I suppose the short answer is yes. Long answer is I'd prefer to not sort of link the two, because I think each partnership that we enter into brings something different, and we should look at them separately. So Gcash, in essence, the way that I think about it, it's a super app. So they're allowing the users
Sure.
to do just about everything. And this is a way for them to easily invest and through that to grow their wealth. But basically, it's a payment app. In Capitec, our aspirations there as a partnership, so both Capitec and ours have not been met. Capitec is massive by client numbers, millions. Easy Equities is small. We don't even have 1 million Capitec Easy Equities clients yet, but we're definitely going to work on that. Expanding with our products, crypto, property, etc. We need to do a much better job with our Capitec partnership than what we have done, and they're brilliant partners, so we're excited about that.
Yeah, I've seen you guys also partner with Sanlam. I think they bought 30%. I know you guys have got a thing with Sanlam Indy. So that's all part of the brand building, right?
Yeah, and we like to partner broadly. We want to add value broadly, and we want to learn broadly. So we're not big on exclusivity, and our partners similarly. So Sanlam owns 30% of Easy Equities, Purple owns 70%. And that started really through our relationship with Satrix, and then Satrix Now, which we've seen huge success with over the years, and a phenomenal team. I mean, Satrix Now, people that you also should have on the show and talk to. They're tiny. I think they're about 21 people, with hundreds of millions of assets, billions of assets, that they look after. They really use technology to grow. But through that Satrix, relationships and Satrix Now, we've extended our partnership with Sanlam. As you mentioned, Indy on the insurance side, that's our Easy Protect product, which we've soft launched. We're refining that. We're going to go through another iteration and extend that to probably another 10,000 users this month in June. And then in July, I'm hopeful that we'll be able to launch that broadly. And maybe that's a useful place to pause and comment. Our transparency gets us into trouble, Charles, more than me and the rest of us, because we want to talk about everything. And so, I'm now saying to myself, don't talk about it until we... But so it's a balance between not keeping secrets, getting input from the community, but at the same time, being close enough to delivery that you can add meat to that conversation. But yeah, Easy Protect, I'm hopeful the final iteration will launch in July.
So, Carl, you mentioned an interesting thing about this transparency, right? And I think a lot of startup founders don't really understand this well when they work with corporates, right? Is the fact that you've got shares listed on an exchange that are publicly traded, and any major shock can cause havoc in the company. Can you maybe elaborate a bit on that and how that plays a role in how you approach innovation? Because a lot of times I see startup founders going to a corporate and going, "Hey, we want to try this," and then they get upset when a corporate doesn't want to publicly launch something or do something, not really understanding the impact of how a public, fallout of some sorts could have a catastrophic impact on the share price.
Yeah, it's an interesting question. I mean, on the one hand, I try to not, and I don't look much at our share price, because if you're going to make your decisions, your innovation decisions on the share price, it's going to be so short-term focused. Obviously, I'm heavily invested in this company, as is, all our staff, in terms of our financial future. So the share price does impact us, but we don't just look at the share price when we make decisions. And so whilst the market, to a certain extent, although the shares have largely recovered, have punished us for our increase in expenses, you then have to explain your story and why you've made that investment. But more directly to your question, for startups and founders engaging with listed entities, I think that there are more and more listed entities that understand that they need to reinvent themselves as well, and they need to have a little bit of cannibalism, as it were. And so I'm seeing more and more listed, big, older, traditional companies that are going into partnerships with younger companies, understanding that they need version 2.0, 3.0, etc. of their own business and their own brands. They can't continue operating as they have. And maybe, from an easy perspective of Purple, if you look at our retirement business, where we engage with NBC, who are now also shareholders in Purple Group, a very traditional, old way of looking at retirement. Not saying it's wrong, but traditional, older, versus what we're doing on Easy Retire, which is, looking at it far more with far more innovation. But yeah, I mean, I think, again, directly to your question, go and talk and engage with the listed entities, explain to them where you're coming from, understand the risks, manage the risks, be open and honest with people. Don't pretend that things are something if they're not. As cliched as it is, honesty is always the best policy.
Gets you in hot water every now and then, though.
Yeah, it does. But it, you also learn, and as much, now a week or two later, I look back and you keep perspective. If nobody died, that is a thing. I also remind myself at the end of the day, we're a tiny financial service company in tiny little South Africa, and tiny Africa in the world. Like, get a life. So our purpose. And we have a saying in Purple, and I drive this a lot in my personal life. Take what you do very seriously. Don't take yourself seriously. And so, laugh a lot at yourself. Laugh at some of the silly things that you do. And I think it's just social media. Often the debate gets nasty, and I don't think that's useful. But don't take yourself too seriously. And make mistakes. Charles also writes from the beginning, and I love this. Fail quickly, fail often, learn,
fail fast,
and learn fast. Absolutely. And Philippines. This is one of the reasons we're launching with the game there. Similarly to how we did in South Africa, it's to learn. It's to give people comfort, to get feedback. We certainly launched with a much better product in South Africa because of the feedback and the learning we got through the game when we launched.
Amazing. So I want to take it back to that. I mean, it's quite interesting now in 2023, fractional equity, the shares sounds like an obvious thing, right? But I mean, it's been actually quite innovative in its products. If you think back that you guys started in 2014, right? Back then, no one was talking anything close to this. And it was seen as this thing that they did in the institutions, your financial managers and stuff. And we've definitely seen a shift in the internet world where the knowledge base has changed. We're more familiar. We can go and learn about what it means to own shares and everything like that. And he has easy equities, right? So let's take the story back to 2014 and how you guys had to build this brand and build a team, because that's kind of where I want to, move the conversation to. Can you just tell us how that story was, finding that first talent and getting yourselves off the ground?
Sure. So, and thanks for the question. I love that, and it's nice to reflect a little bit, which we don't do well enough. Purple Group existed, and a big chunk of it really was GT247, which is a trading business. Charles hates it when I call it a casino, and when I tell people that they will lose all their money in it. But like a casino, you will. The problem is that, not the problem, many people make lots of money, and so everybody thinks they will. And there's a place for it, but you need to have a high risk appetite, and you need to be very clear of the risks and then the big rewards. So that was happening, and Charles was on holiday, and long story short, and spoke to his family about investing, and his wife and kids gave him a hard time for many of the reasons that people like me, who would consider themselves relatively intelligent but would be intimidated by finances. Like people talk about stuff that I have no clue about, and then I'm made to feel stupid, and I need loads of money. And so he came up with the idea and quickly involved a couple of our teammates to launch Easy Equities. And in doing so and engaging with regulators and other people within financial services, there was a tremendous amount of pushback because of retail investors aren't going to be clever enough, which is why one of the things that I said, every opportunity, retail investors are smart. Now, I used to say that because I believed it. Now I say it because I believe, and I've got the facts after 8, 9, 10 years of how retail investors have invested. Currently, when the economy is tough, what do our investors do? They put in less money, as our results show, but they don't withdraw significant amounts more. Do they have diversified portfolios? Absolutely. Do they do all of the right things? Absolutely. And if you look at all the easy investors and you take them as an average and you compare their returns to some really smart asset managers, they do better than many, and at times most, if not all of them. So retail investors, but at the time people were worried, oh, you can't let them invest because they need this guiding hand, or they need clever people to help them along. And that's simply not true. What I think retail investors need, and what Easy Equities tries to do, is to give education and to make it fun and exciting. The companies that are listed have products and services that we use. So it's interesting being engaged. So the first thing was around, just pushing back and saying retail investors are smart, and you can put guardrails there in terms of the education to protect, it's not people aren't gonna run wild. The second and what I also love, big thing that Charles did is he hired difficult people like me. So Charles is a strong personality, and he is eloquent, and he knows financial services extremely well. And so what Charles could, and many people should have done, is to employ a more traditional marketing person that would nod their head and agree with him. he didn't. He employed me knowing that there would be very different and robust conversations. And I use myself as an example, but we have diversity in our team. Not enough yet. And there's not just the obvious diversity that we must improve on in terms of race and gender in our country, but other kinds of diversity, backgrounds, thinking. Carly Barnes, who works with me and has largely made me redundant from a marketing perspective, worked as an actress. She knew nothing about financial services, and I'll challenge anybody to find me a better financial services marketer than Carly Barnes. Different background, different experiences. So find people with different ages. So in building a team, I cannot overemphasize diversity. Diversity of thought and creating the space for those diverse voices to be heard, which is difficult often in a startup because you're busy doing everything. So it's difficult to sit and ask for an opinion and to listen genuinely, especially when that opinion is going to be different. And we don't always do that well enough at all. And I count myself also really bad at this with my team. But the value every time with diversity, we see it time and time again. And it's one of our biggest strengths and our not so secret weapon at Easy Equities. There's a Facebook group with over 300,000 people that was started by a user, Easy Equities. The feedback and the input I get from 300,000 diverse views. That's why I don't need a massive marketing department or marketing consultants or agencies. I've got 300,000 people who are telling me exactly what I need to know. Yeah. I don't need to commission people to do a survey on retail investment in this country like some regulators that I won't mention do. I just go on Facebook and look and ask.
Yeah, that's interesting, eh?
Yeah, so, yeah.
We talk a lot about that on communities here, Renier.
Yeah, so Carol, there's a part of me that agrees with your sentiment that users are smart, but surely there's a cap at how many users will be smart. I mean, if you started getting into the kind of users that are not that smart, and they need more training wheels before you actually let them loose on the markets.
Yeah, so I'll be facetious, but some of the less smart investors are the ones that have got more degrees and more money. So I think there's a lot of scope. So no, I think everybody can do with education, and to be serious, it's challenging an industry where we talk about things and assume that everybody knows it or should know it. So I'll give you a classic example, which is my favorite, one of my favorites. People talk about bibs. They love, the charges, so many bibs and stuff. No normal person knows what a bib is. It's you two and Charles and like a few other weirdos that know what a bib is. Like, really? Like, say what it is. Talk about percentages. Like, don't come with another terminology for something that is like, just change your language. And saying, well, the cost is this, the management fee, the blah, blah. So we try to, and again, we need to improve far more Easy Equities, but to be clear about what it means. What I'm going to charge you. What's it going to cost you? It's your money. So no, Renee, I don't think we've reached the cap of non-smart investors, but what we haven't, where there's lots of room is education, and that's Easy Equities and the industry. I mean, we spend the majority of our budget as a country on education, and we do a piss poor job at it. And we don't educate people on finances and investment at a school-going age, which we should. And then later on, companies like Easy and all our competitors, education, and that isn't lecturing people. It's giving them the right information and empowering them to make their own decisions.
So do you think if people get better on the stock market, they'll be better entrepreneurs and better business people themselves?
That's a great question. And my short, very emphatic answer is absolutely yes. And I'll tell you an interesting story. And, I must watch it. That's why I generally don't like doing these things. So in answering Bobby, I generally say yes to things, and then I make Charles or other clever people do it, because then I can lecture them. They say something that they shouldn't have. So I need to be careful. But
you're teeing yourself up here, eh?
Yeah. Don't think of this is something. But with our insurance product, developing with Sanlam, one of the things that our product team, Almira and the guys argued for, is that if you're an investor, you're actually a better risk. And so, as you may know, in insurance products, if you have the higher your qualification academically, the better often you're rated as a risk. Now, whether that's right or wrong, we can debate, but actuaries would use that. Certain people of an age would be a better or worse risk. So part of what we've argued successfully is that as an investor, you're a better risk because of your behavior, because of your thought patterns, because of what you're doing. So I think they are. Also, it's discipline, which an entrepreneur needs. You need to have discipline as an investor. You can't go with the wind. If you've invested in purple for good reason, you can't every 6 months change your mind. Similarly with, Tesla, whatever the brand is. I think discipline helps with entrepreneurs. It definitely helps. You can't be a successful entrepreneur if you haven't got discipline. Also, consistency. Doesn't help if you shoot the lights out today as an entrepreneur and tomorrow I'm tired because I gave everything yesterday. It's every bloody day. So now you've given me a good idea for a blog, because I really think the more I think about it, absolutely. Good investors, good entrepreneurs.
Yeah. Yeah. So during this journey, you've obviously had to build a brand and build a team. Can you tell me, like, what are the things that you kind of did to start attracting the best talent? Because I mean, that's what really drives your business, is having the right people around the table. So what was that experience like as you grew and Easy Equities had no name and had no kind of, history or anything to go back off on?
Yeah. So again, thank you. Great question. We, as I say, we've been lucky, but it's not luck, because we've always been clear that culture trumps strategy, and culture really is just people. So it's who you hire. It's also importantly who you fire and who you promote and who you train. So it's also the people that you don't keep and the people that you don't allow in. So Easy Equities is not, or Purple Group's not a business for everybody. It's it's a specific culture. So I think one of the things that we've did well and do well is we allow people to be who they are. And it talks to the diversity point earlier. Like, you don't have to dress in a certain way. You don't have to hide if you're a certain sexuality, or you have a master's degree, or you didn't finish school. All of those things, you bring something to the pot. And it's getting recommendations from the community. So the Facebook group that I mentioned earlier, like the guy who started that, we ended up employing him. He heads up content in South Africa and works with Isha, one of our brilliant colleagues in the Philippines, on content, Kayla. It's employing Carly, the brand manager, who is the actress. It's not just fishing in the same old ponds. It's also importantly, when people don't have enough opportunities, to encourage, to help them leave for better opportunities. We've got somebody in our brand team now who's leaving. He's been with me for a long time. Fantastic guy, made a great contribution, but he's going to a wonderful new opportunity. And that's positive. And we've seen, people who leave bring us other opportunities. We're big on making things accessible also for our team. And gender for me plays a massive role in that, in financial services. And it's one of the things I'm really proud of at Easy Equities, and I'll celebrate big time when we get to 50% women on the platform, and we should be more than that. We don't, generally use massive agencies. We get recommendations. We like it if we know the person who's telling us, check that person out. And we do stuff together. Our end of year, a year or two ago, we did the Warrior Race with some partners of ours. It was the whole company. And whether you fit or fat like me, whatever, it didn't matter. Everybody did it. Everybody took part. The value in doing things like that is immense.
So Renier, like, your experience working with a lot of startup founders, can you resonate with what Carl has told us, and where do you think that people are potentially going wrong?
Yeah, I think to a large part I agree, because we're spending time with people in work, so we need to enjoy getting along with them, right? But I think there's this trap as well that it can become too much of a family and not enough of a business. So I think it's a very delicate balance where you go, cool, there's a part that is, we need to get along and we do fun stuff together, but there's also a part that work is serious and we need to get the job done. Yeah. And I think often people get that one a bit wrong.
I couldn't agree with that more. And I think people, confused when they say it's a family environment. So your family members are the ones who tell you when you're an idiot.
Yeah.
And they're also the people that you should listen to, because they're telling you you're an idiot because they care for you deeply, more deeply than anybody else. And I think what businesses do wrong is, because we're all nice, we don't give direct feedback. I think that's being dishonest.
Yeah.
If you're not giving me direct feedback when I'm stuffing up, you're not being nice to me. You're lying to me behind my back, and you're being unfair to the other people who are performing. And so I think you're completely right, Renier. You've got to be able to have direct conversations. You've got to give the feedback. And I appreciate it when the people that are closest to me tell me that, what the hell are you doing?
Yeah.
Because those are the people I'm going to listen to.
And it's difficult across age brackets, because different generations deal with these things differently, right? I think the younger generation are respectfully, they have a sense of entitlement, which is something to navigate. And then in between, the 30 to 40-year-olds, is a different breed as well. And then you've got the boomers that are super hard workers. So it's difficult to navigate that. And Carl, I'm interested to know in Easy Equities, like, how diverse are you in terms of age?
So age, we're very diverse. And I like the point that you've made now, because I think we don't, it's, my gut is it's harder for young voices sometimes to be heard. And you don't want those voices to switch off. I agree with you on the entitled point. My big bugbear is that young people don't read enough, but that's for another time. But
they think they've got nothing to learn from older people. That's the problem.
So no, we're diverse in terms of age, and not at I was going to say not at our coaches, our executive level, where Charles and I are the elders, and I'm 49. Charles is 49, 50. Yeah, I think we could maybe do with one or two more of the older people, and navigate that a little bit better. I think we're lucky in that our audience, our clients, are so diverse. I mean, we get, one of our favorite marketing stories is a young guy called Heno, who joined us, when he was in school. He's now finished, studying. But the feedback that we got from him, and the best photo he ever posted on social media, was him in a barn with a makeshift blackboard lecturing to his grandmother about investing, spanning that whole thing. And I love that. But yeah, I'm going to think a little bit about this question, because you can definitely learn from different age groups. I try not be patronizing when I give feedback to younger people. I like that Bob Dylan, where it's the times they are changing, and otherwise get out the way if you haven't changed with the times. But you also don't want to throw the baby out to the bathwater. There's a lot to be said for experience, for people who've gone through cycles, particularly in financial markets. There's a lot of value to be in a space where people like our CFO and Charles have gone through downturns and really challenging markets. If you're coming in as a youngster, and this, you think it's all doom and gloom. So it's useful to have the context of cycles and history.
So you told us before we clicked on the record button that you're not just kind of focused on Purple Group and Easy Equities. You have a couple of startups. So how is that experience going? Like, what are the lessons you're kind of pulling through to these new ventures?
They all, that everything feeds into itself. And so all of the people that I'm involved with outside Easy Equities are Easy Equities clients. That's sort of a prerequisite for a start, and they give me some good feedback. But I'm involved with two young South Africans who started a brand called Sparkies, which is a burger joint. They started it in COVID. They had a little bit of money. We had some money, and I think the startup lesson there is that they've been extremely disciplined with their cash. So they came to me, "Can we do this?" Said, "Do we have money?" No. So no, we can't. So you've got to make a bit more cash, and then slowly. And so they're opening their second store now, and they funded it through cash. We funded it through cash. So it's a business that's opened in COVID. It's a takeaway business. These guys worked very hard. They create work now, employ 9 people full time, which I think is a great, it's a responsibility we've all got to do that. And they could have sat back and said, "Oh, poor me, COVID, South Africa, I need to immigrate, I need to go overseas, I can't get a job." Instead, they've done this. And that's one of the reasons I absolutely adore entrepreneurs. They have guts and tenacity, because it's bloody hard being an entrepreneur. You're the last one that gets paid. You're the first one opening up, the last one to close the shop. And you always have to be the public face of, happiness and joy. So yeah, that's going really well. I'm involved in a little insurance business called Me. I have a lot of experience in insurance, and I think it's another industry that there can be far more disruption in. Far more entrepreneurs can get into that space. Because there's money to be made there, and there's lots of value that one can add to people through insurance. Without insurance, the economy can't work. And so again, it's, people say, "Well, why start it now? Load shedding, tough times, all the rest." Why not? Because there's so much opportunity as an entrepreneur, where older, more established companies put all these legacy issues. So, we're seeing great opportunities there. And for me, the simple thing with all of the businesses now, and when I won't carry on there, it's people. I back people. I joined Easy Equities Purple Group because of the people. I stay there because of the people. Personally, I partner with people whom I like and enjoy, whom I can learn from, who challenge me. Life's very short, then we die. So, why waste any time with idiots? And idiots for me, everybody's going to have their different definition of idiots. But for me, idiots are people who aren't optimistic, who aren't contributing to the community, to my life, who aren't, learning, challenging, growing, building. And, if I could give a piece of advice to, entrepreneurs or people that are starting businesses and want to build something, is just pick people and go with your gut, and make sure there's a values alignment. If there's not a values alignment, then just don't compromise on that.
But what if you get somebody that you realized is a no-go anymore? How have you dealt with that?
You need to tell them. You need to tell them that they need to be happy and successful elsewhere. So I think there are very few people that are truly evil and useless. And if people aren't successful, it's because they're in the wrong environment. And you need to help them see that, and they need to be successful and happy elsewhere. And I often help people find other opportunities because I want them to be happy and successful elsewhere. I just don't want them to be stuffing around in the present environment and to be unfair to the people that are really delivering. So be direct, be honest, be honest.
Because the South African labor law doesn't afford us much help. Like it's very easy for someone to go through the motions, and there's CCMA and all of that. I mean, I've been in part of those, and it gets quite nasty. So I don't know. I mean, if you can be honest and avoid it, then I mean, please share some advice.
It is true. When I was at a corporate, I was a young and small corporate, but I said to HR, that's the cost of doing business, and long term, it's going to serve us much better. Even if you have to pay, 12 months salary, whatever the ruling would be. I genuinely think if you have real conversations with people and you don't leave it until, things have been going forever, you give feedback, you invite feedback. For me, it's why did you not perform? If the dog bit you, I can forgive it. If you didn't perform because you didn't have the right equipment, I can fix it. If you didn't perform because you're lazy, I'm going to tell you not to be lazy again. Second time, cheers. But yeah, labor law definitely is not friendly to us. Couldn't agree more. There's all kinds of legislation that makes it difficult to start businesses, to stay legal now. All the boxes one has to tick. It's costly. It detracts from people being able to quickly start businesses.
Carl, I want to come back to your insurance startup.
Yeah.
When you launch as Easy Equities, and you've got some money in the bank and got a network, and you've got partners like Capitec and the likes that can roll out the business, it's obviously significantly easier than getting going when you're an insurance startup. So I'd like to hear from someone that's got a lot of experience in marketing and gaining traction in the market. How are you going about marketing for this insurance company? How do you do distribution? I mean, a burger joint, you put up a place or a setup where there's a lot of feet, right? And as the feet come by, chances are there's a percentage that'll give it a shot if the product's good. They'll tell people they'll do it again. Insurance, that's a bit different. Like it's a bit of a grudge purchase. Like, how are you going about it?
Yeah, all these good questions. So short answer for all of those is you build communities. And so how do you build a community? So this insurance business we've started, the community is brokers, intermediaries. So we're exclusively focused with helping brokers get to clients, making their lives easy. So before starting this company and saying, here's an amazing product, or we're going to do technology, we sat down and asked brokers, what is the biggest frustration in their life? What is the thing that prevents them from servicing their clients? What is the thing that helps, that makes it difficult for them to help clients understand that insurance is fundamental, not a grudge purchase? We got fantastic feedback. And that's how we've designed our product. That's how our policies are designed. That's how our processes are designed for this community. The burger joint, yes. Yeah.
How do you find the people, like this community? How do you say, okay, cool? Do you put them in a WhatsApp group? Do you email them?
Like, do you cold email them?
Don't overthink it. Start. That's the other thing. Start. Don't overthink. So in this real example is, my background is I know a bunch of workers, but one of my best friends, Josie, is married to a broker. So I have a drink with him. My partner in this business and the founder of this insurance company, she's got contacts. So you engage with them, you talk, you ask. And then somebody said, well, I know that person, talk to them. You've got to pound the streets. You read books, you listen to podcasts. It gets back to the diversity again. It's get information from loads of different places. Look at what associations like the Financial Intermediaries Association say about their membership. They've got thousands of brokers that are members. Go to the African Insurance Exchange Conference once a year in Sun City. So in building communities, source widely and broadly. I'll give you the burger joint example, which is yes to exactly what you've said, Renier, but also build a community there. You get deliveries. A lot of the business is through Uber drivers. How many other burger joints have got a relationship with the Uber drivers in their area? My guys, like them. Yeah, my guys have a relationship with every single Uber driver. They know their family members. You know, they help them. They take an interest in their kid. They ask them. They play soccer. They do stuff together with that community. So who's gonna, who's the Uber driver going to go to or recommend? And the other thing is, in building communities, you don't have secrets. Like, I'm not giving away a secret now. Oh my word! Now everybody's going to do that. Other business aren't going to do that. Yeah, because they're going to strategize. They're going to, faff around, and we've moved on. But it's build communities. The distribution channels are really difficult. And as you've also pointed out, Renier, that is a big thing for entrepreneurs. You need to get distribution. You need to get feet for your product. How do you do that? And now people say it's easy for Easy Equities because we've got hundreds of thousands of clients. I remember the day, when we signed up like 10 clients, we were rejoicing. Now we get 1,000 a day, but it wasn't always easy.
Yeah.
And don't try and control it. The other thing I have is hold on lightly, not tightly. Don't try and control your community. Our community sometimes tell me stuff that I downright know is wrong until I realize it's not. Our community tell me, stuff, and so it grows organically and it changes. But build the community and listen to your community. And this is part of it. I mean, this is what you're doing as well. It's giving information to people. It's inviting views. And it's brilliant.
Just on the community thing, Carl, I love what you're saying. I'm just wondering, like, how do you keep them engaged? Like, I mean, these guys you're asking them to meet every now and again. You're getting some feedback from them. Like, I mean, at some point, there needs to be a value exchange where they get something in return. So what are some of the things that you've seen that works well to keep that conversation going?
Yeah, I won't say another good question, but it is a good question. So I don't have one answer because it depends on the community and where you're at. But, I like going to classical music concerts. So I'll invite people in my network, in my community or the community I'm trying to build to come with me. So we might be engaging over a burger or insurance or investment, but our shared interest is classical music. Or, previous insurance company I was part of building Etana, I looked after the marketing and HR. The HR principles were fundamentally modeled on Burning Man in America that I attended for many years. Now, here you've got a commercial insurance company in South Africa starting HR principles based on Burning Man. Nobody would have thought that. But it's again the word diversity. How do I keep people engaged? I'm honest about my life. I don't have my work here and the rest of my life here. If I'm going to play soccer, who wants to come and join soccer? Cool, the Uber driver's kids, no problem. It will the value exchange comes. Like, it sounds a little bit airy-fairy, but in my experience, if you do the right thing, the value comes. If you're dealing with the right people with that values alignment. And also say yes to stuff. If people ask you to do something like a podcast, say yes if you can. Don't say, oh, well, you need to go through corporate communications, or I'm too busy, or I'm, say yes.
Lovely.
So what do you think is the biggest lesson you're taking from your experience at Easy Equities and you're taking it into this insurance? What is the biggest thing besides community? Like, what was the biggest you and like, I need to change this or I need to implement that?
Easy has taught me more resilience. And so don't give up. If you've got an idea that you believe in and a purpose, like, don't give up. Like, when the money is about to run out, when you're being slagged off on social media, when you haven't slept for a long time, don't give up. Remember why you started that. And I'll never forget that from this Easy experience. Maybe just one other thing is be clear on what you are and what you aren't. People say Easy Equities, some people would compare us to Robinhood. We're not like Robinhood at all. We're not a trading company in and out. We're about growing and protecting wealth. We're not about live pricing, because that would mean that we would have to be more expensive. So that is 15 minutes delayed pricing. Does that really impact most people? No. We're not about a call center, because if I had to have a call center, it would increase costs. And because retail investors are clever, I've got FAQs and 80% of the questions are answered there. So also be clear about your purpose, and don't try and be everything to everybody. I suppose is the simple point I'm making in a long-winded way, and I suspect that you and Renier would have many examples of that as well when you start up. Don't be everything to all people. Know what your niche is. Focus on that.
But I think what's difficult with that, Carl, is, you know, when you start out, you need to figure out, well, what is the niche that is going to work, right? I mean, did Easy Equities start out knowing exactly this is where we're going to double down and this is where we're going to be good at?
No. And you're right. That is the difficulty. I mean, that comes back to the agility and getting the feedback, learning, failing, and also giving up on certain things, changing.
So I think it's like a cone, right? Like in time, you need to get more focused. And I think what a lot of people, they do the opposite. Like as they see some things don't work, they try and put more things on the menu if you were a burger joint. And where that's the wrong thing you can do. You need to simplify it. You need to get the costs down. You need to get feet through the door, and you need to get going. Like it's not about offering more. It's about offering more focused. And then trying to figure out, okay, how do you get vertical or horizontal, depending on what the best approach is.
We call it whiplash.
But it's also, I mean, I agree with you. That's sort of from the negative perspective, it doesn't work, they try, but it's also, if things work, you're very tempted to have 10 verticals. I think that's also something we're looking at. So we definitely want to have verticals, and we are, but we measure it against, is it going to help you grow or protect your wealth? If it can't be anything beyond that. So you've also got to, when you extend, when you're successful, you also should be careful about extending too much.
But how do you build a community around a speculative kind of asset like this? Because that was the question I had in back in my head earlier, right? So you talk about building a community. What if your product is, you know, speculative or uncertain, or there's just that kind of question mark around it? How do you convince people that this is how you should go about it? Like,
honesty, transparency, education. So, you know, on crypto, what did we have as first? We didn't launch with a highly speculative thing. We launched with EC10, which is a combination of the 10 largest coins by market cap. Diversification immediately. You explain the risks and don't put all your money into it. So be open, you know, transparent, do the education and get smart people. So, you know, one of the people that Earl employed is a guy called Don. You know, I think Don's about 18. He's probably 25 or so. I don't even know his age, but he's young. Super smart. He's done his, you know, masters in this field. And so one of the big advantages we have is we've got somebody like that, because he's so smart, that's helping with education, that's helping explain to people that this isn't gambling. You know, what are you investing in? What are the risks?
Yeah. I have one last kind of theme, and then we've stolen enough of your time, but just kind of a word that's come up so often today is education. And like, why, like, I don't know, like, how do you go about educating people? You know, we know finance is this kind of, I don't know, this question mark, this cloud that hangs over people's head. You know, what can one do if they are also starting a business that has this education element? What has been the best way to kind of get your community educated?
So definitely not one size fits all. It's realizing that you have to do everything. So whether it's social media and different types of social media, whether it's long form, short form, pictures, don't do what you think makes sense. You know, talk to people, find out, but also don't do use yourself as a bit of a guinea pig. So I said to people in the beginning when putting out education, my God, it's so boring. I'm falling asleep. Why would anybody look at this? So, and the other thing is, don't reinvent the wheel. You know, there's a lot of stuff out there already. Collaborate. Partner. And again, say yes, make yourself available. It is a hard slog, but it's a great privilege. You know, as an entrepreneur, as a founder, as a person who starts businesses, it is a great privilege to get an opportunity to talk about your business, to share about your business. And when people, you know, do that, and again, thanks to you guys, don't, you know, and when you're bigger as well, you know, like, don't be arrogant about it. Like, say yes.
Renier, any last things before we go?
No, I loved, Carl, you triggered a few thoughts, and I think specifically like partnerships, how important that is. Like, I think actually, you know, I've always seen the press releases and the updates around the different partnerships that Easy Equities have gotten into, but now, you know, that we've talked about it, it's actually quite significant, the amount of partnerships and things that have popped up over time. And I think a lot of startup founders don't think about it. They think about, I have to build a product, right? Where you actually have to build a business, and a business needs partnerships. and it needs a product, right? So while you're building the product, you know, be building relationship with people, you know, play football with them, go to classical music concert with them, build a relationship that could result in partnerships that can just help 10x this business. Because at the end of the day, you know, all of this stuff is about distribution, getting in front of the right people, and if there's no point in having a good product but not having any means of getting it out there or giving it a leg up by partnering with someone. So that really stood out for me, Carl, and I thank you for sharing that.
Thank you guys very much. Great to chat to you, and yeah, look forward to all your future episodes as well. Thank you.